PowerPoint introduction slides with the trading platform in the background. If you can, give me a thumbs up. Marco, everything is good. Thank you. All right. It's fantastic. Looks like the YouTube folks just popped in, as did the Facebook. Thank you for the thumbs up on YouTube, by the way, whoever that was. I appreciate that. We're going to go ahead and get started here in a minute. And so I look at my charts. NASDAQ is really getting hammered today. That is a surprise. Let me close some of these other windows so they're not in our way. I think we're good to go. One more minute. L. Larry, hello. Thanks for coming. You were here this morning. Thank you for coming this morning to the live trade setup event. It was a lot of fun. At least I had fun. I don't know if you had fun, but I had fun. And we'll do it again next week, Tuesday, Wednesday, Thursday. We're gonna, I don't know, 30 seconds we'll get started. I do want to let everybody know, as you will ask, hopefully, maybe not, but this event will be recorded and it will reside on the NinjaTrader YouTube channel. So if you go to NinjaTrader YouTube channel, you'll be able to see it later. Mark says good session. He came late. That's okay. We're going to do it again next week. Do it again next week. Interesting times in the market for sure. All right, it is starting time, everybody. Thanks for being here. If you're brand new to these NinjaTrader events, my name is Jim Cagnina, Senior Education and Training Specialist for the NinjaTrader platform. If you're not brand new, that is still my name. So thanks for coming back if you're not brand new. If you are, welcome. I'm glad you're here. I do want to remind everybody before we start, trading futures, options on futures involves substantial risk of loss, not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. And all that could be an equation for opportunity. It's also an equation for risk. So be careful, be in a good spot. Only fund your futures trading account with risk capital. That's my advice. My personal definition, and I understand everybody's unique and different here, and my personal definition is money I could afford to lose doesn't change my lifestyle, lengthen my retirement horizon, or overly stress me out. And stress in life is important. We tend to make bad decisions when we're under stress. At least I do. And I know I've made a lot of bad decisions. So keep that in mind. Any questions on that, type them in. I am logged into my simulated live NinjaTrader trading account with real-time data feed. And I'm going to use the platform to tell the story. I don't really have a PowerPoint. I do have a PowerPoint, but we're not going to use it today. We're just going to talk about the market through the lens of the platform, because I think it tells a really good story on why these futures markets are different than other types of trading opportunities that you might have, either on the, in the stock market, and options with respect to options, ETFs, over-the-counter Forex, CFDs. So we're going to kind of compare the differences, and why I'm a super fan of the futures markets, and I've been involved in these markets on and off throughout my career. I started on the floor of the Chicago Board of Trade in the early 80s. So I just dated myself a little bit, but that's okay. I'm not ashamed. Really, this all started with the Royal Exchange in London, 1571. Right, trading securities and speculative instruments and commodities have been around a long time. Right, the Royal Exchange, I think, was, as far as I could tell, was one of the earliest official organized exchanges with rules and bylaw, and regulations and all that stuff. And that's 1571. So that's, I don't know how many hundreds of years ago, but a long time ago. The Dojimi Rice Exchange is the next famous one, which was 1667. And Dojimi is, the word Dojimi, this is Japan, right? The word Dojimi, we recognize the word doji, and candlestick analysis kind of started back then in Japan. And then we still use it today. And you can see in my chart right now, I have a 10-minute candle chart on here. I use the word candlestick. Maybe that's not the right word. Candle. candle analysis with the body and the wicks. It's been around forever, right? And the word dojimi, doji is a type of candle. It was derived from that. Let's fast forward a couple hundred years. 1848, CBOT creates the world's first futures exchange, based in Chicago, where I'm from originally. It was a commodity market back then, right? Chicago was a trading hub right off of Lake Michigan, and it was a common destination for goods and services. And so when we think about the CBOT originally, we think about commodities, right? Grain, corn, oats, wheat, those kind of things. Which are still very powerful today and very great futures trading markets today. But it's much more than that now. There's many more asset classes. The field has been expanded greatly. And about 20 years later, 1870, Board of Trade develops these octagonal futures trading pits, right, where everyone's standing around in these circular or octagonal trading pits making trades. 1898, and then the CME gets involved, right? It was Chicago Butter and Egg Board, which was the predecessor of the CME, opens in Chicago. So now we have some competition. We have another, and again, you see commodities in butter and egg board, right? I started, like I said, in the early 80s. In 82, CME launched its first successful stock index future, the S&P 500. Now we're looking at a version of the S&P 500 right now, electronically on my screen. And we're going to talk about that, play some sample trades and all that stuff as we go. I was side by side with that when that was launched. CME was in a different building than the CBOT. The Chicago Board of Trade was in a different building, the historic building that you see with the goddess Siri at the top of it as you look down LaSalle Street. And I was in the pit there, and things were a little bit more difficult for retail traders to participate back then, right? You would have to know about it, right, or have read the Wall Street Journal, or have some sort of insight about the futures markets, and then you would open up an account with a broker, right? And you couldn't do it online. You had to fill out account forms. Call them up and say, "Hey, could you mail me the account application form?" Right? And you'll get a packet in the mail with an account application form. This is early 80s I'm talking about. You'd fill out the application, and then you would mail it back, and then your account would get opened, and then you would have to fund your account, right? And back then you would probably send a check, and the check would get there, and you would have a trading account. But you couldn't just trade online at that point. It's early 80s. There was no online at that point, really. And you would call your broker, and the broker would answer the phone. He would call, or she would call the representative on the floor of the board at a trade. There's a series of phone banks right there. And then they would transmit your order. The phone clerk would write it down on a piece of paper, hand it to a runner, which was me. I would grab that piece of paper, run over to the pit, hand it to a broker that's standing on the outside of the pit. He would take the piece of paper and then reach back behind him and hand it to the filling broker, the execution broker, who would turn around and make the trade with somebody else in the pit. Then the trade was written down. It was given back to the broker on the outside of the pit and handed back to the runner, which was me. I'd bring it back to the trade desk. The trade desk then would call your broker, whoever they would be. And then they would call you and say, "Hey, you just got filled at XYZ price." So if you were doing market orders, who knows what your price would be? Sometimes that fill got reported back to you a couple minutes later. Sometimes it got called back to you several hours later. So, and sometimes you didn't get filled. It was unable, they would say, unable. And so then you would be all upset. It wasn't a process that was really oriented toward retail traders. To make a long story short, very inefficient. Might be inefficient for the guys on the floor, complicated, and also the guys on the floor had the edge where you did not. So anyway, what happened, though, the good news is in 1992, this stuff started going electronic, right? CME Group developed the Globex electronic trading platform, which allowed traders to send orders in electronically on a first in, first out basis, first come, first serve. So it's starting to get a little bit more fair, right? In 1992, though, we really didn't have a lot of online connectivity. Maybe America Online was starting. If you remember America Online, remember that? That might have started. I can't remember, and that probably not for a couple of years actually. So still not a lot of online, but you could trade it electronically if you were on the floor, or if you had a special setup. But in 1997, everything changed. The CME launched the E-mini S&P 500, and that's the market we're looking at right now. And it was a smaller size contract, so you didn't have to have as much money put up in your account to trade this contract, and it corresponded with all of the electronic facilities that were available to us. Online trading platforms started to come about in their first generation of creation in 97, and online access was getting better and better. And so the E-mini S&P in 1997 really started this whole thing rolling, right? We expanded the participants to the retail community, smaller size contract, electronic and fair. In 2002, CME goes public. 2007, CME and CBOT officially merge their companies. And then in 2008, CME acquired NYMEX. So most of the popular US-based futures markets now are under one umbrella called the CME Group. And another phenomenal thing happened in 2019, May 6, 2019, my notes say here, with the creation of the micro E-mini S&P contract. And it's even a smaller sized version of the classic E-mini. I'm going to call it the classic E-mini S&P that I'm looking at on my chart right now. And what it did was it really made retail futures trading accessible to anybody. You know, you could open up a futures account with hundreds of dollars instead of thousands of dollars, and you could participate on a first in, first out basis alongside anybody else in the world. And the CME now has developed a huge notional value of contracts that are traded on a daily basis, on a regular basis. And so we're going to go ahead and explore some of those markets. We're going to take a look at the platform, and we're going to talk about, you know, how they're traded and all of that stuff. And the reason I have the E-mini S&P up here right now is this is probably one of the most popular retail markets that we have right now. You can see the market's breaking down. This is just a candlestick chart, and prices are going down, right? Instead of going up today, they're going down today at this point in time. And I'm going to just describe the components here. This is the control panel up here on the NinjaTrader platform. Super powerful. It doesn't look like much, but there's a lot of stuff you could do. You could see your open orders. You could see your executions, strategies if you have them in play, positions. I don't have any yet. Your accounts. I have a couple SIM accounts up here, log files. You could open up all sorts of different kinds of new windows, all sorts of tools to your disposal, save different workspaces, to have different connectivities, and get help. So there's a lot of stuff you could do up here with this control panel. Moving right to the right here, we're going to talk about the charts last. This is a chart. You know, charts are charts, right? There's every trading platform in the world, not everyone, but most of them, you have access to charts and charting and technical analysis. And this has been around for a long time. So we're going to talk about this last. It's very powerful, and there's a lot of stuff you could customize here. But I really want to go to the next level here, which is the Superdome, NinjaTrader Superdome. This is called a price ladder. It's called a bunch of different things: a depth of market, a price ladder. This is a NinjaTrader Superdome, and I'm going to freeze the prices for a second. And the word price ladder makes sense, right? Because what you have is each price increment in the middle column here, and you'll see each price increment goes up by the smallest amount possible. That's called a tick. If you're trading Forex, you might know it as a pip. And each one is the smallest price increment for every particular market. And we're looking at the E-mini S&P stock index future. The S&P is based on the S&P 500, which is a large cap stock index in the US, probably one of the most widely followed stock indexes in the world. And you see it on TV when you log in the morning before the equity markets opened up. They talk about the S&P being up or down overnight, and they're referencing the futures market. This price ladder now, it's traded in quarter points, or each tick is a quarter, and the value of each tick is $12.50 per contract. So if you bought a contract at 75 and you sold it at 85 even, you would have grossed $12.50 on one contract. Vice versa, if you would have bought it at 87.75 and sold it at 84.50, you would have lost one tick, or $12.50. And if you think about the math, each increment, if you multiply it by 4, then you get a point value of $50. You get a point value of $50. The numbers on the left-hand side in the buy column are bids. And these represent contracts that have been sent by traders, institutional, retail, commercial, whoever, to the exchange, to the Globex electronic trading exchange at the CME. And these are in the order book. And you can see how many contracts at different prices, 10 ticks below the last traded price, which is that yellow flag there in the middle. Or you can see offers. These are contracts that traders have sent to sell contracts at various prices above the last traded price. And it's 10 price points up and 10 price points down. This is called a direct access level 2 view. I'm going to remove my amount. It moves around, right? So these bids and offers here are moving around. People are, traders are adding volume on the bid and offers. They're canceling orders. They're canceling and replacing orders at different prices. It's a very dynamic process. And the great thing about this, in my opinion, is traders. This is a transparent, regulated, centralized exchange. What I mean by centralized exchange is everybody could see the same pricing, whether you're located in Chicago or Charlotte, North Carolina, like me, or if maybe you're in Hong Kong, or maybe you're in London, maybe you're in the Ukraine. Who knows where you're at in the world? But you're going to see the same thing. You have access to participate on a fair basis without a broker interfering. Nobody's selling your order flow here, right? You place a trade on the NinjaTrader Superdome, and it's going directly. It's being routed directly to the exchange, right? And as an example, let's go ahead and do just a practice trade here. And I'm going to do. I'm just going to pick a random price. Don't follow along at home. 82 even. I'm going to move my mouse to the buy side, and I'm just going to click once. And this is a simulated sim account. I'm in sim mode right now. But if this were a live account, I would have sent this to the exchange. And when I got this flag back on my dome, this is my confirmation that's sitting at the exchange. And these prices are measured in milliseconds, really, these days. And most people globally have great internet connection and able to access the market that quickly. So in any event, again, this is a limit order I just sent. 82 even. I'm waiting for the market to come to me, and if it comes to me, I'll get filled, right? And the definitional limit order is, hey, I want to buy a contract here at 46.82 or better. That's the definitional limit order, right? So you probably won't get or better here, but when the price comes down, I have a chance of getting my order filled. And there's 166 contracts in front of me, right? Remember, this is first in, first out. So I have to wait for that inventory to be depleted before I get my order. And there's a chance that 164 of them would get filled, and then the market rallies back up and I don't get mine. It could happen, but alternatively, the market can't go to 81.75 without giving me my fill, right? So I'm kind of blocking the market in that regard, right? So if it starts trading 81.75, I'm going to get my fill. It's first in, first out, and that's how the electronic algorithm works at the CME Group. Now, alternatively, if I wanted to sell a contract instead of buy, and I could just pick a price here, let's go 85 even, and I'll just click once. And I would have sent an order to sell a contract at 85 even. And you can see my yellow marker now is approaching my limit order at this particular point, and we'll see what happens. I'll just keep talking and we'll see what happens as this thing moves around. That red line is just the daily low, right? I've just added the daily low marker to my trading ladder in this particular market, just so I know where the low of the day is. Could be helpful sometimes it's not. From Facebook, Mahawi asks, and I apologize if I said your name wrong. Hi guys, can you explain how the Bollinger Band works? We'll take a look at some of those when we get to the charting part of the presentation today. But thank you for that question. D-host, unfortunately, no. The answer is no. Greg, hello again. MA, hello. Pam, hello. Okay. In any event, so that's how the trading ladder works. Now, you could just see it. You might have heard the NinjaTrader software said, "Hey, order filled," right? And now, what does that mean? Well, in future trading, remember, you're buying and selling contracts, right? Most of us are day traders, so we're not going to hold a position for very long. And right now, I'm expressing my opinion that, hey, this brown area here is a marker that shows me where my position is. I'm I bought a contract at 46.82. The bottom of the trading ladder shows me that I'm green, which means I bought it, or I'm long one contract, one unit. If I would have sold it, which you could do in futures trading instead of buy it, you don't have to wait for anything. You could just sell it if you want. It would be red. And the market is trading now at 46.83.5, right? So I can see what I'm going to call is open trade equity or unrealized P&L. And it shows up here on the control panel, as well as in the actual trading ladder itself. This number right here, it's green right now because we're on the right side of the trade. That's showing me, hey, my mark-to-market net liquidated value of this trade is $62.50. And that's how we would say this. Mark-to-market, we're up $50. We're up 62. Thing is moving around as we're approaching our target, right? Our target is here. And the one thing I didn't do is place a stop loss in, and that's something I'll do right now. I'm going to use my mouse. I'm going to click the center rung on the wheel, and then I'm going to throw in a stop loss. So now we see the anatomy of every trade, right? We see a position, we see a profit target, we see a stop loss, and I could take my finger off the mouse and wait to see what happens. And if we're fortunate enough to sell a contract at 85, which we just were, then we had a successful trade idea, and I could cancel my stop loss here and start again and do another trade if I want, or if not, I could just stop trading and go to Starbucks and get a cup of coffee. So this is just kind of a brief overview of what you're looking at. The NinjaTrader, for those of you who are futures traders and a little more advanced, there's also what's called ATM strategies available on the platform, where you could set parameters to automate kind of what I just did, and then the different options here are pretty much endless. But that's kind of beyond today. In any event, that's the Superdome. If you want to change instruments, you could change them just through this drop-down menu. You could add different tabs at the bottom to toggle between different markets, and it's very customizable. You could have two of them opened up. I could just right-click and hit the duplicate window and have a second one open up, or you could link everything to your quote boards, which I've done also. So that's kind of the nuts and bolts of the trade. And this is unique. You can't get this trading ladder anywhere else. You're not going to get it over the counter Forex, CFDs. You're not unless there's a place where all the liquidity is in one place. You're not really getting it. Even if you're using a what I would call a direct access level 2 NASDAQ trading ladder in the equity world, and you're a pattern day trader with $25,000 or more in your account, then maybe you'll get something similar. But you're not going to see all of the liquidity. You're not going to see all the orders. So this is what makes futures trading unique and gives traders the ability to trade like a pattern day trader and invest less risk capital. I guess would be the way that I would say it. And so if you wanted to see, Celio, if you want to see where you actually got your fills at, then I just go to executions, and then I'll just look at the last two here, and you'll be able to see the two, right? So we bought one at 82 even, and we sold one at 85 even, and that represents 3 points. Each point is worth $50 a contract, or $150. That's how I would see it. Now, a lot of times it don't move so fast, it's hard to see, right? But because those were limit orders, we knew what our price was going to be, if in fact we got to that place. Okay, let's talk about, well, I'm going to move over to, we talked about the CBOT originally being commodities, right? I'm going to move this market analyzer over to the middle of the screen. And this is really, think of it as a quote board. It does much more than a quote board, but the way I have mine configured for the presentation, it looks like a quote board, right? We have the instruments in the left column. The second column, we have the last traded price. The daily volume is in the third column. And in the fourth column, I have the net change on the day, right? Here's the net change on the day. And, the stock index futures are all negative except for the Dow, which is positive. And then I have a couple of Eurex. Let me just tell you what these all are. So the first asset class here is the stock index futures, right? Probably the most popular amongst retail traders using NinjaTrader and retail traders in general. And I have some contracts up on the top. And ES represents the Emini SP, right? And it's the symbol is ES, right? It started in 1997, and it's very popular. We have over 1 million contracts traded so far today, which is pretty good. And keep in mind the notional value of one E-mini S&P contract is $50 times the traded price. And so let's just take an example of what that would look like. I'm going to multiply 50. I have my phone. I have my calculator on my phone. I'm going to multiply 50 times the last traded price, and let's just call it 46.88. The notional value of one contract is $234,400. That's a lot of market power for one contract. So keep that in mind, because we're going to talk about that more when we get to talk about leverage and day trade margins and all that stuff works. And I am going to plead with everybody to be easy with the day trade margins. Take it easy with the day trade margins. In any event, E-mini S&P. Then I have another E-mini S&P contract here that says 1221. This is the expiring contract. You can see it has less volume in it. Everybody's now trading the new front month contract. Most people are the front month contract, and that's the March 2022 contract. And it's not that complicated of a concept. Every 3 months, a contract will expire, and a new contract in the exact same market then will take over as the front month. That's all it is. So every 3 months, these numbers change, and you're looking at the next quarterly contract. That's why I have 2 of them up there. I was just showing the difference earlier today that, hey, we've already rolled over. We're already trading in the March contract because that's where all the volume is. The next one down is the NASDAQ. It's NQ. This is the NASDAQ 100. This is, commonly referred to as tech stock index, even though a better definition is non-financials, right? There's no financial companies in here. There's other stuff other than tech stocks, there's some healthcare and other things, but this is only 100. Right, so the basket of stocks is smaller, maybe more sensitive to price, and it is a market cap weighted index. So some of the bigger companies have a bigger weight in the direction of the index price, right? And we've all seen this thing move. Elon Musk says something crazy at night, and this thing moves around, and that's kind of how it works. But it's very popular, very good market to trade. RTY, that's the Russell 2000. This is the third stock index future, which represents small cap stocks, right? These are smaller size companies. And then the Dow Jones, which everybody's probably familiar with, is the Dow Jones Industrial Average. Has been around forever. And there's a futures market on Dow Jones Industrial Average. And then the next couple ones are just European ones I track. This is the Frankfurt Exchange, the Eurex Exchange, the Euro Stock 50, and then the DAX. Now, the next area I have under here are the same contracts, except they're the micro versions of the contract. They're 1/10 the size, right? And so instead of a $430,000 notional value, it's a $43,000 notional value. Everything's 1/10 the size. The tick size in the micro ES is not $12.50. It's $1.25. Right, and so it's 1/10 the size, and it gives you some added advantages, right? Maybe you have a smaller size account, and you don't want to get involved with too much leverage, and you want to participate and express your opinion on whether or not the market's going to go up or down. You have access to this market, right? And maybe you want to scale into contracts a little easier, right? You want to buy more than 1 or 2 units at the same time and scale in at different prices. This gives you the ability to implement those type of strategies as well. Jay asks, is there any benefit in trading the older month instrument? And he goes on to say, I ask because there is some volume still. My answer to that's no. If you're day trading the stock index futures, you want the most volume because you want the tightest bid-ask spread, and you want the most assurances, at least chances of getting in and out of your trade. So the more volume as a general matter, the better. So I would never suggest. No, in my opinion, there's no advantages to trading the older one. But thank you for that question. That's a good question. Okay, let's go on to the next category of asset class, currencies, Forex, right? Over-the-counter Forex versus futures Forex, which is better? I'm a super fan of the futures markets, and I'll give you some examples of why over-the-counter, or why the CME Group FX products are better, right? And you have all the major currency pairs. You know, you got the euro, the yen, the pound, the Canadian dollar, Aussie, New Zealand, and they all have a 6 in front of them, right? And, oh, by the way, I didn't mention the micros tend to have an M in front of the symbol, M for micro. Currencies tend to have a 6 in front of them, with exception of the dollar index, which is actually a little, it's not really a currency cross per se, but it is a currency market. So the majors are here. There's some minors here, minor crosses as well that I'm not showing on my quote board. And a couple advantages. One, you're on a regulated exchange. And remember, we talked about pricing, and I'm just going to go ahead and click on the British pound sterling versus the US dollar. And here's the chart. And then here's the trading ladder. And again, everybody is seeing the same pricing, right? If I opened up 4 over-the-counter FX accounts, spot accounts, with 4 different brokers, and at the same time simultaneously hit the buy market order on all 4, there's a high probability I'm going to get 4 different fills, prices at 4 different fills, right? There's a high probability of that. So number one, you got this pricing transparency. Number two, there's no 3 to 5 day settlement, right? When you open a position, you don't have to close that exact same position and wait, right? Number three, there's no interest, carry charge, right? You don't have to pay carry interest to hold a position past the close, which I think is a pretty good thing. And then fourth, it's highly regulated. This is, highly regulated. The CFTC, among others, have their pulse on this, and the capital requirements are very, very extreme. So I am personally more comfortable with these particular currency markets. And I was a broker for 20 years. We used to sell over-the-counter forex accounts, and so I've kind of seen the difference between the two, especially with respect to pricing. And even if the over-the-counter forex is using an EBS pricing, and they're modifying it somehow to get it into their algorithm to offer you a bid-ask spread. Micro versions, there's some micro contracts here. You can see the M in front of it again. There's a lot of them. I just have the pound, sterling, Aussie dollar, and the euro up here. Underneath it is the energy markets, right? So energy futures are big business. I got the crude oil market here. This is the West Texas Intermediary light sweet crude market. Very popular, one of the 3 global benchmarks, right? You have the WTI, West Texas Intermediary light sweet crude. You have the Brent crude, Northern Sea Brent crude, which is less sweet. And then you have the Dubai benchmark crude, which is sour crude. And the sweeter the better from the point of distilling components like gasoline and low sulfur products. So it makes it more desirable. The lighter the sweet, the better from a distillation point of view. In any event, there's a micro crude oil, very popular. Natural gas is in the news all over the place. Very popular market. And there's other energy markets as well that are liquid and that are very tradable through the futures exchanges. Underneath that, metals. We have precious as well as industrial. You have the gold futures. GC is a symbol there. Silver, SI, got a micro gold. We have a copper. There's other metals in the metal complex as well. These are the ones that I kind of take a look at and keep my eye on. Treasury instruments. The Treasury markets are all over the news these days. Flattening of the yield curve in the U.S. and all of this other stuff that's being talked about with respect to interest rate policy at the FOMC, tapering at the FOMC. And, the U.S. Treasury markets has always been a safe haven, a flight to quality, right? Flight to quality. So you have the whole yield curve represented here from the ultra bonds, they're called. They're a true 30-year bond. The ZB, this is the original 30-year Treasury bond. It was the pit I was in the early 80s, and the symbol used to be US, and they kind of adopted the ZB once they started allowing for night access on the floor of the Board of Trade in the 80s. And so they had a US contract and then a ZB, right? And I guess somebody thought it was funny. Let's put a Z in front of it, snooze, because it's a night contract. The pit was open at night. Eventually, the pits all went away, and then the electronic markets took over, and the ZB kept its symbol ZB instead of US. So that's a little factoid there, a little fun factoid. You can trade micro gold, Craig. Great question. For that, so that's a 30-year bond. Also, it's not a true 30-year bond though, because you could have durations in that portfolio of less of 26 years. Less than 30 years. 10-year ultra note, 10-year note, regular 10-year note. We have the 5-year, the 3-year, the 2-year note, all the way down to the Fed funds. That represents the yield curve. So all of those interest rate products are represented, and you could trade you could spread between them. You could or just trade them outright, whichever one you're interested in. And the live trading setups we do on Tuesday, Wednesday, and Thursday mornings, we started looking at the ultra bond, and we're going to start talking about ultra bond trade setups also as well going forward. And you can see the volume in these markets are huge. Let's just take a look at the 10-year note. I'm going to click on ZN. Let's look at the bid-ask spread. The bids now are no longer in double and triple digits. They're in 4 digits. They're seriously big numbers, which tells me there's a lot of institutional activity as well as retail activity within this particular market. So that's how you know you have that's probably the most liquid market that I have on my actual screen here. Let's kind of move on. We have what time is it? We got a lot of time. We're in good shape. Cryptos, we have a couple of options. We have the micro Bitcoin, we have the big Bitcoin, we have the Ether, which is relatively new. They're all relatively new, and I don't think they haven't got enough volume yet to be wildly popular. But there's some reasons to consider Bitcoin. I'm just going to freeze the dome for a second. You can see the bids and asks are in the single digits. The bid-ask spread is wide. It's not that advantageous for us. However, one of the benefits of trading is you can go short, right? You could express the opinion that, hey, the micro is trading now at 48,170. I think this market is going to go down. I think it's going to go down considerably. And I don't know if I'm just saying that's what you might think. It's not necessarily what I think. I'm not sure what I think. But so I have the wrong market. I'm sorry, I have the wrong sub account here. Let me try that again. So if I'm going to put an order in, I'm going to put a limit order in, I'm going to wait. And you can't really sell crypto short easily anywhere else, right? You can't, if you get a Coinbase account, I don't think you could sell cryptos. Maybe a Kraken account, you could sell cryptos, but you would have to borrow from the broker first, right? You have to borrow from the Kraken exchange first to sell short, just like you would with a regular stock if you want to sell a stock short, right? So you're borrowing money, you're paying interest to somebody to do that. Here you're not doing that. This is just, there's no, you have margin in your account set aside for this trade, and you place the trade, and then you can go long or short and express your opinion in an efficient way, whatever it may be. So I think that's a positive there. Three Lions Insight, good afternoon. Grains at the very bottom, I got grains, right? These are some of the old commodity markets, right? They're very popular. They're, in my opinion, specialty markets because you have other factors involved, right? You have weather, you have transportation, you have import exports, you have all sorts of complicated factors in grains, but there's corn, and they have that Z for the same reason the ZB has the Z, right? They had a night session, and then the night session became the electronic session. The electronic session, became the only session. Yeah, corn, oats, soybean meal, wheat, et cetera, et cetera. So you have all of these legacy markets that are still very, and you don't even see on my screen is coffee, cotton, cocoa, sugar, those kind of things that were called softs. Those are also very popular. I just don't have them on my quote board. I ran out of room on my screen. In any event, That's the Quilt Board. This is how these are the markets. This is no longer, every asset class is represented here. And there's even more asset classes I'm not even going to talk about because they're not really retail markets, but weather is an example. You could trade weather, electricity, things like that. But VIX, I do have the VIX on my Quilt Board at the very bottom here. VIX is a little bit of a different animal traded at the CBOT. And it's not represented as a futures market here on my NinjaTrader platform. Okay, let's move on to, I'm just going to look at my notes just to make sure I'm not forgetting something here. We already talked about the pattern day trade rule, not pertinent here. You don't have to have $25,000. You don't have to, there's no uptick rule. You don't have to wait for an uptick to go short, is another example. This is a 23-hour marketplace, which means the market opens up at, I'll give you an example. Sunday night, the market opens up at 6 o'clock Eastern time and goes all night, all day until 5 p.m. Monday afternoon. Then it closes for 1 hour. And then it opens up again at 6 o'clock Monday night, goes all night, all morning, all day to 5 o'clock. Tuesday afternoon closes for 1 hour. That cycle repeats itself all the way until Friday, 5 o'clock. Then take Saturday off. You can start again on Sunday. 23 hours repeats itself for 5 different sessions. And why is that? Is that important? I think my answer is yes, because you could participate again without being a pattern day trader anytime you want, right? And in my Elon Musk example, that's a good example, right? How comments after hours could move things, right? Could move things. And there is some extended trading hours in the equity world, but not a lot of it. You can't go all night and all morning. And for options, forget about it. You can't even. There's no extended trading hours for options. The liquidity pool for options is confusing anyway. So this gives you the ability to express your opinion when there's a geopolitical event, right? The world does not revolve around a New York Stock Exchange open and close. I mean, things happen all night, all morning. So you have that ability. You have the ability to liquidate a position if you're not comfortable with it in the evening, or to create a new position if you'd like. So that 23-hour thing, this 23-hour period where there's no additional steps you need to take to participate is, I think, very, very important. And I wanted to kind of mention that as well. Let's talk about margins and how that works. That's the next unique thing in futures trading. And I have an Emini SP window up here. And it works differently than you might be used to thinking about margin trading in the equity side of things, for stocks or ETFs or stock options. So you're not borrowing money from a broker in futures trading, right? If you want to trade on margin, you're going to go, you're borrowing money, you're paying interest to do that, right? In this case, the margin, when we refer to margin, when you establish a position, what you're doing is we're allocating a certain amount of money that's already in your account for that position. And let me give you an example here. This is again, the Emini SP market. And I'm going to go ahead and I'm going to just click on, I'm going to go buy market. I'm going to hit actually I should go sell market, but I'm going to go buy market. I'm going to buy a contract at the market. Let's take a look at the my second account here, the SIM account 1. My cash value was $13,133. My intraday margin, that's how much money is allocated in my account. It's also referred to as day trade margin, by the way. How much money is allocated of my $13,133 to place this trade? $500. And this is a typical day trade margin through all the brokerage firms, regardless of whoever you use. Typically, you'll get a $500 day trade margin for an E-mini S&P contract. The excess intraday margin is saying, hey, you started with $13,133. You're using $500 of it. So I'm going to subtract 500 from $13,133. but you're making $25 unrealized P&L. So I'm going to add that back in, and your excess intraday is 12,657. That's how much extra intraday day trade margin I have available to me. So I'm in good shape. I don't have to worry too much. The next column over, it says initial margin. And this is, again, a term that's been around for a long time. And really what that means is overnight margin, exchange minimum overnight margin. And you can see it's a lot bigger. It's $12,100 for this one contract. And that's because the CME, the exchange decides what it is, right? The exchange says this is what it is. There's no wiggle room. Brokerage firms or FCMs can't give you a break on that. It's the rule, right? The CME Group says, hey, it's $12,100. They run a risk assessment model called span margining, and they come up with these numbers. And they say, if you want to hold a position for a longer period of time, and we don't care if you day trade, right? You liquidate your position before the close. It's a day trade. We don't care about that. If you hold this position past the close for a day or 2 days or a week or a month or 2 months, then you have to have $12,100 in your account to do that. Now, the weird thing about the whole thing is overnight's only 1 hour now, right? So overnight's only from 5 to 6. It's only 1 hour, but it doesn't matter. That's the difference. That's the rule. And there are many position traders that hold positions for a long period of time. Andrew, hang tight. I'll get to that in a second. So that's kind of the difference between the two, and that's what you have to think about. Now, this particular, and I'm going to go ahead and liquidate this position. I'm just going to, I'm long a contract. I'm +1. I'm long a contract. I'm just going to sell one at the market. Okay, so now I'm flat. I don't have a position. If I would have sold one, I would have been short, but I didn't. Let's toggle over to the micro. I'm going to toggle over to the micro Emini SP. And let's give that a second. And I'm going to do the same thing. I'm just going to buy a contract at the market. Now, remember, everything is 1/10 the size smaller. So my cash value is now $13,120. My intraday margin is only $50. It's not $500 anymore. It's like $50. Excess is the difference between the intraday, the cash value, and my unrealized P&L. Initial margin is 1/10. The CME Group said, hey, it could be $1,210. So now you're starting to get the idea of why micros are not a bad strategy if you're going to hold positions for a longer period of time, as an example, because you don't have to worry as much relative to the big contract on your initial margin. Everyone with me? Okay, so I'm going to go ahead and I'm going to buy a second contract. I'll hit the market button again. So now I'm long 2 contracts, and it's graphically represented on my chart. Also, there's my green 2. I'm long 2. My P&L is moving around in the middle there. It's red. That's bad. It's negative. And look what happened to my intraday margin. Now it's $100, right? Because I got 2 contracts on instead of just 1. And then the excess day trade intraday the math is the same, and then my overnight margin is doubled to $2,420. Now I'm going to show you one more idea. I'm going to go down and just put a limit order in to buy a contract at 46.77, and it's not filled yet. It's just oops, it got filled. My bad. Okay, well, it got filled. So there's 3. This market's breaking down. There's 3 contracts now. $150 day trade margin, right? 50 times 3. And then we've multiplied our initial margin by 3. Let me kind of scroll way down here. I'm going to go ahead and just send a limit order in at 46.69, right? 46.69. And my intraday margin is $50 more, even though I don't have a position on, because the day trade margin takes into account your potential position. I have a potential to have a 4th unit. That's why it's 200. But when I look over at my overnight margin, it says we're only going to count it if you have a position. We're not going to believe it till we see it. So your day trade margin didn't go up by another $1,210. So that's a little bit of maybe I'm in the weeds a little bit even talking about that, but that's kind of how that works. And by being long 3 contracts, I'm basically long 30% of a big S&P contract, classic S&P contract. That's how that works. Okay, so one last thing to note, tick sizes for different markets are different, right? So they're not all $12.50 a contract. They could be different. And I'll just show you a Treasury bond market. Let's just go look at the Treasury bond markets. And you'll see they're quoted at like $162 and then a caret or a hashtag 03, right? That's 30 seconds. Treasury bonds are traded in 30 seconds, right? And so each point, so 162 even to 163 even would be 32 ticks, and that would represent $1,000 per contract, which means each, if you divide by 32, each increment is worth $31.25. So it's a little bit odd, right? It's not like gold or crude oil, which is $10. This is a fraction, and it's based on bond pricing, and there's a reason for that. Okay, charts. Let's talk about charting. So charting in futures, there's another huge advantage in futures markets, in my opinion, with respect to being able to see order flow, right? And here, so I have, a candle chart up here. Let's go back to the ES since it's easier to think about. Oftentimes I need easy to think about. And I'm going to go ahead and hide my chart trader. Chart trader hidden. And you see this kind of this volume profile on the left-hand side. I'm going to talk about that for a second. I have a Fibonacci retracement. I think that's perfectly valid a tool to use for any kind of trading, right? Any charts will have it. And you look for a trend A to B, and you put that on the chart. I have an oscillator at the bottom here called the Commodity Channel Index. Maybe you're going to use RSI or MACD or something different, which is fine. Then I have a moving average cross at the bottom. All standard stuff, no matter what kind of markets you're trading. And the unique part here is this volume profile, right? And what this volume profile is showing me is all the volume that has traded at every single price since the market opened today. And so now I see a pattern which tells me where more volume is traded, where less volume is traded, where buyers and sellers are happy. I see where price happiness is, and it helps give me some information on areas of interest to help me decide where I would like to place my trade, my stop loss, and my profit target. And we cover this in detail on Tuesday, Wednesday, and Thursday. But because there's only one E-mini S&P market in the world, this is all of the volume. And it's shown, I have it displayed as a histogram, sideways histogram. And it accumulates volume over time, but it's not time sensitive. In other words, it's not like a expiring candle. It just keeps accumulating data, and it gives me clues to where the market is happy and where it's not happy, and where the market is weak and where the market is strong. Tuesday, Wednesday, Thursday, we go over that in excruciating detail. So feel free. But that's a unique thing for future trading, seeing all the volume in one place, whether you're using number bars or volume weighted average price or any of the order flow tools on NinjaTrader. It's awesome. And the NinjaTrader actual suite of, I'm just going to right click. You could right click here and do anything, right? If you go on the control panel at the top, right click, you could duplicate, right click in the body of whatever window you're looking at, you get a drop down menu. I'm going to click on indicators. On the upper left here, here's all the usual suspects and then some, and my indicator list. They're all highly customizable. I think I'm going to say most of them, maybe not every single one, but probably, I don't know. I haven't gone through every single one, but the ones I use are highly customizable. And then you just click on it, you add it, and you customize it, and you apply it to your chart, and you're good to go. So this is a pretty feature. This is a rich feature as far as the charting software goes. So I just wanted to kind of show that off as well. We have about, we have a handful of minutes left. Any questions I missed, go ahead and type them in. Anisha, the order flow tools are here. I'm going to go right click. I'm going to go indicators. I'm going to go down to order flow. And let me show you the ones that we have. We have order flow cumulative delta, which I think is the one you're asking about. Kyle, hang tight. I'll get to that. We have order flow market depth map. We have the trade detector, volume profile, volume weighted average price are the ones on here. Now keep in mind also, these are the ones that are they come in the box, in the container when you get NinjaTrader. There's also this is also a development platform. So there's all sorts of plugins that you can get from the NinjaTrader ecosystem. If you just type in NinjaTrader ecosystem or even NinjaTrader plugins in Google, you'll get all sorts of opportunities to kind of look at other tools that you could add to the already extensive amount of tools that are here on the platform. Kyle, this is a downloadable application right now. Again, it's a developer application. It's very light. I think the data and trade execution is very swift. However, I got some good news. I guess I can't give you timeframes, but there is a move afoot to get this on, Macintosh and cell phones and mobile apps. All that stuff is work in progress. You got to be patient. The tech guys at NinjaTrader are geniuses. I can't really ask them for a time frame because you don't ask IT guys for a time frame. Whatever answer you're going to get, you never know. But anyway, that's work in progress. So yeah, you got to download it on a PC, Windows based, but I think you'll be happy with it. And on that note, though, it's really important. There's very few things you can control in the markets, right? You can't control price. You can't control economic releases. You can't control what government officials are going to do, but you can have good hardware. You could have good internet connections and be healthy. Those three things you can control, or to some extent, the third one, try to be in a good mental spot. It's kind of a side note to what Kyle's saying is, PC prices are low, monitor prices are low. I've got 3 monitors here. You could only see one of them. So I have other windows and charts on other windows. I just kind of could see glancing on the side, and I can move them in to show you, but, there's nothing too extraordinarily exciting. Life Round here says, I'm an IT guy. Time frame requests are just rude. LOL. I know, I've given up a long time ago. But good stuff's coming out in the pipeline for sure. It's on the chalkboard. It's past the chalkboard. It's on somebody's keyboard, I guess I would say. Mark says, can intraday margin positions be held all the way to the 2 p.m. close? So I'm guessing you're on the West Coast. Yeah, intraday. So it depends on your brokerage firm. Most brokerage firms allow you to hold intraday positions that get you past the cash market close, right? So I'm going to use East Coast time, which would be 4 o'clock East Coast time. Now you have that extra hour in there. And then depending on the brokerage firm, sometimes they'll ask you to close positions before the end of that extra hour. It just depends on your brokerage firm. A NinjaTrader platform here is a multi-broker platform. So, but yeah, typically it's could be 15 minutes ahead or something like that. And you don't want to run the risk of getting liquidated automatically. And not only that, you definitely don't want to run the risk of being on margin call. So just keep that in mind. And lastly, I'll add to that, Mark, is after the cash market opens up, oftentimes nothing good becomes of it from 4 to 5, right? Unless you're reacting to unplanned news, right? After hours earnings or something that happens in that time frame, that might be a different story. But generally speaking, to continue trading during that hour after the cash opens up, and I was a broker for 20 years. Usually, bad things happen anyway. Bad things open anyway. So just keep that in mind as you're day trading. Okay. Let's see. There's another question there I did want to answer. I told someone to hang tight on that, and I would get to them. So Andrew's asking about account minimums. Again, NinjaTrader. I'm not a broker anymore, and NinjaTrader platform is a multi-broker platform, and so account minimums are different, and it depends. Also, if you're just going to open up a micro account and trade the micro Forex, or if you're going to trade the classic, the original size contracts as well. But the bigger size contracts are in most brokerage firms are going to have a minimum somewhere between a couple thousand and 10,000. On the micro side, it could be as low as in the hundreds. So I would reach out to I would reach out and just look at that. But it's a smaller kind of level. Risk capital only, guys. Easy on the day trade margin for sure. And because it's one of the big common mistakes is over leveraging. Okay, covered a lot of ground today. I'm gonna just glimpse my notes one more time. I think we covered it all. I think we did. I think we're ready for Future Trading 201. Mark, thank you for coming. I do appreciate that. And Isabella, if you could cut and paste in the platform training. Next week's agenda is going to be Tuesday. There's all sorts of events next week. Isabella's going to go ahead and cut and paste in the link for the events. Those will be updated on Friday. So you see some different events on the link that she's going to send in to the chat boxes. And keep that in mind. So we have a whole full week next week. Christmas week's going to be a little light, a little different, but just keep that in mind. And I do want to remind everybody, trading futures, options on futures involves substantial risk of loss, not suitable for all traders and investors. Oftentimes in futures trading, you have that high combination of leverage and volatility. And although that can be an equation for an opportunity, also equation for risk, only fund your futures trading account with risk capital. Thanks for coming, everybody. Hopefully we'll see you next week at some of the other events, particularly the live trade setups on Tuesday, Wednesdays, and Thursdays. And I do want to leave you with this. Be safe out there and be good to each other. Thank you.